Hello traders, how are you? How have you been? Wanjiru Gishangi here from Forex Experts Online Academy. I hope you've been well. Have you created time to watch the other videos? Did you find anything interesting? Do you have a challenge or a topic that you'd wish I could create a video for you? If so, be kind to inbox the Forex Exploits page on Facebook or send a WhatsApp message on the number on the page. For today's video, I'll be talking about blocks. This is a common request where traders want to know what types of blocks we have out there, how to trade those blocks, and the most important, which among the many blocks available really holds. And that is what we'll be dealing with today. As always, I always start my videos from a beginner's perspective so that it has value for all types of traders. So back to basics, what is a block? A block is basically a price point from which an impulsive move or what we call institutional move starts. Now, whether you're a beginner or not, you need to go through the market structure video. We agreed that market structure is foundation to any successful trader. So make sure that you've gone through the market structure video and that your market structure game is on point. That way you will always know where the market is going based on the structure. So if you're a beginner and this is the first video that you come across on my channel, pause it, go back to the channel and watch the market structure video. Moving on, a block can either be a buying block or a selling block. Now, let's say we're dealing with a buying block. For a buying block, it means that it will be a block that will give us a trade to the top side. So we'll have the green candlesticks showing the buying. I'm not really good with the drawing, so I'm just illustrating. You see it better on a chart. So these are candlesticks. And where did that buying come from before we got to the blocks? Of course, we had a red candlestick. Now for a buying block, when we want to identify the buying block, of course, we'll take the red candlestick and we'll mark it and it will give us the buying block. So we're just going to write this as BB, meaning our buying block. Now, what do we place on that block? That is something that we'll talk about when we move on. But this is a buying block. It's pushing the market upward, or it's where the buying started. Then, so this is buying. So you can just draw that, showing that's a buying cycle. Then we have the selling blocks. Now for the selling block, it's coming from one green candlestick. And then the other candlesticks that come from the buying will be red candlesticks, pushing the market downward. Forgive my drawing. So when you want to mark the selling block, of course, you're interested on that green candlestick. And so this is our selling block. So they are either buying blocks or selling block. For this, it's pushing the market downward. Then can be formed from a range base or trend base. This is something that we discussed on ebook 4. On the institutional book, we talked about the different types of the basis that gives us blocks. Now, when you're talking about a range-based block, the market will be on a range, it will be ranging. Then at some point, it draws an impulsive move. The block that gave us this impulsive move came from a range. So when you're drawing your block, it's from a range base. For the trend base, the market will be trending, giving us impulsive moves, reactive moves back, impulsive moves up, reactive moves down. Now, there will be blocks that are responsible for these impulsive moves. That is what we call the trend base. So this is a range base block, and this is a trend base block. Then it can be found on any time frame. Meaning you can have a block from the 1 minute chart, 5 minute chart, 1 hour chart, daily chart, monthly chart. But note, it's stronger when it's a block that you're trading from a higher time frame. We'll see that as we move on with the video. So what are the characteristics of a block? One, it must give an impassive move. So when the block happens, it should give this move, very violent, or what we call the institution or the market maker or the volume-based moves, okay? Then two, must bring about break of market structure. Now, this is a buying trend because we are creating highs. This is something that we've discussed on the market structure video. So it's giving us higher highs. Now, for us to get this higher high, this high here must be broken. Let me change my color. So this high here must be broken for us to get this high. So this is break of market structure. This is what we call BMS. You see all these on a chart. So this break of high to give us another higher high up here is what we're referring as break of market structure. And of course, if you're on the sell side, if you're on the selling cycle, so of course, if you're from the sell cycle, you'll be having impassive moves down, reactive move back, impassive move down, impassive move down, reactive move. So this is a low. For break of structure to happen, this low must be taken out or it must be broken for it to give us a lower low. For us to have break of market structure, this must be broken to give us another lower low. So this action here is what we're calling break of market structure. The third one is it must take out. It may take out liquidity. This is not for all types of blocks. Now, there are blocks that take out liquidity, there are others don't. Now, what is liquidity? This is something explained on book 5. So for liquidity, there are different types of liquidities. We have liquidities on trap zones, that is the swing lows, equal highs, equal lows, previous day highs. We also have liquidity that is trend-based, okay? All this. Money that is available for conversion, the buy stops, the stop losses, okay? So we have the trend-based liquidity. We also have the trap zone liquidity. So some of these blocks usually take out that liquidity, but not all. So this is not compulsory for all types of blocks. We'll go through which types of blocks do take out liquidity and which ones don't. We have the 6 common types that we'll be discussing on this video. I'm not sure if there are more blocks out there, but these are the 6 common ones. And this is what we'll be discussing on this video. So block number 1 is what we call the hidden candle block. The hidden candle block. So let's say we're on a buying cycle. So this is an example of a buying cycle where we're having green candlesticks. We're having green candlesticks to the top side. So this is a buying cycle. So it has green candlestick. Now in here, you may find that you have a candlestick. You have a candlestick that is almost invisible. Like you really can see it. Yes, it's green, but there's a candlestick to the left and to the right. It's in there. The invisible candle. This is a candle that will give you a very strong block. So when you're drawing a block on that move, you just highlight that hidden candlestick. This is usually a very strong block, the hidden candle block. On the sell side, of course, it will be the opposite of this. You'll be having the red candlesticks down. So let me draw the red candlesticks on this side. And they don't have to be 3 or 4. This is just for example purposes. And how do you tell it's hidden? Because the candlestick to the right and to the left, they've actually just covered it up, you see? This tail has covered the top side, this tail has covered the bottom tail, and can also be the body, not necessarily the tail. So this one here becomes a block, okay? So this is a cell block. Oh, my drawing game is usually not so good. So this is the type of the hidden candle block. Note it's a very strong kind of block. Block number 2 is what we call the engulf or the engulfing candle block. Now this is also called the strong block because it's usually very, very strong. So if it's a cell block, to of course be coming from this, the green candlestick, and then a super huge red candlestick. Okay, so this one here has totally engulfed our green candlestick here, and so we have this as a block. So this is a sell block. If you're dealing with a buying market or a buying block, dealing with a buying block, we will have, of course, the red candlestick that will now be engulfed by the green candlestick. I need to I think I should just use the blue pen. The green pen is really giving me a hard time. So there. So I'm using blue to show the buy. So this is a buying block where the buying candlestick has totally engulfed our selling candlestick, and the sell block, we have the selling candlestick having engulfed the buying. Of course, there's variation. This variation of this type of block, we will deal with it when we're doing examples on the chart. Then we have the multiple kind of block. Now we're done with the engulf. So we're going to the multiple kind of block. For the multiple kind of block, let's say we're having a red candlestick here, and the market is changing direction to the top side. For that candlestick to give us break of market structure, it may sometimes require more than one candlestick to break it. To break this candlestick, you've taken 2 candlesticks. To break the red, you've taken 2 candlesticks to break that. So this is called a multiple candle break or block. Okay, so we have a multiple candle. It has taken more than a candlestick to actually break that market to the buy side. If it's on the sell side, we have this green candlestick. Okay, let's make it big. That requires more than one candlestick to break the market to the bottom side. So when you're marking your block, of course, doing that. So we have this as our selling block, and this is our buying block. So it basically, the multiple kind of block means it requires more than one candlestick to break the previous structure, or to break to give us market break of market structure. Then we have the void. This is very, very common, and I think everyone in here knows it because I talk about it so many times. It's very, very common in the market. So we have this buying candlestick. No. So if we're on a buying cycle, it means that the candlesticks are pushing upward. Now the market between this wick here and this one, there's some void. there's some void in here, or what we call imbalance or inefficiency. So this can also create a block. You can create a block using the imbalance. So that's what we call the imbalance block. And of course, for the sell, the candlesticks will be red, and the in between is what we call the imbalance or void block. This is also a very, very strong block. I hope you're paying attention to see the strong ones so that you make a decision on which ones to concentrate on. Instead of concentrating on all 6, you can just decide to be looking for one type of block and working strictly with it. Then we have the double mar. We have the double mar or the double marubozo or the kissing candle block. So for the kissing candle block, you have this buying candlestick. Again, don't mind my drawing. So we have this buying candlestick. You see that they're almost kissing. It's like they're kissing or they're close to each other and they have almost equal tails to the top side. Now, the reason I've said almost equal tails because it's not cast on stone. It's not always that you find that the tails are of equal length. But again, you pick now the tails, the bottom tail of the candlestick to the top side and the top tail of the candlestick at the bottom side. And there you have your buying block. This type of block is called the candle, the double mariposa or the kissing candle block. For the sell side, you have the red candlestick to the top side and another candlestick below it. Remember, you're selling, so the market is pushing downward. And so you take that, that. Okay. So as we move on, we will explain which week to deal with if you're buying, and of course, which week to deal with if you're selling. That is on refinement. Maybe we'll do another video on the trading of the blocks, on how to refine them, and of course, how to trade them. So that is the double mar kind of block. Then we have the final one, what we call the railroad track or the double tweezer kind of block. This is where you have 2 candlesticks that are of opposite direction but of equal size. Okay, so this here is a buying block. You identify the sentiment based on the last candlestick. If it's a selling block, it will of course start with the buying candle. Then the next one will be a selling candle. They have to be of equal size. Okay, that is very, very important. They have to be of equal size. So this here is a buy and this here is a sell. This is really not a very strong block. If you're choosing types of blocks, this is not really a very serious or a very strong kind of block, though if this is what will float your boat, then it's okay. So these are the 6 types of blocks that are very common in this market and the blocks that we'll be dealing with when we get to the charts. Okay, so let's see them from a chart. So here we have this as the hidden A, the hidden candle block. You see there are the green candlesticks, then we have this candlestick here almost hidden. So if you're drawing your block, of course you pick that. Okay, if it's a selling block, you see this candlestick here, it's hidden. So there you have a block. So this is a buying block from a hidden candlestick. This is a selling block from a hidden candlestick. Then we have the NGAV. The NGAV has variation. You have one with like very strong candlestick, but you can also have an NGAV using the wicks. Okay, so if it's a buying NGAV, of course you're picking that red candlestick and you draw your block. If it's a selling block, of course you're picking that green candlestick and you have your block. If it's the variation, it's the same thing. Okay, so just picking. Remember, you pick the candlestick that is engulfed, not the engulfing itself. Be very, very keen. You're picking the candlestick that has been engulfed not the engulfing candle. That is something that you should. Let me change colors. Let me change color. Let's see. Oh, no, that's too strong. Let's give it a blue. Yeah. So the sell ones are the ones that have the blue, and the gray ones will be the buy ones. Okay, so you're picking the candlestick that has been engulfed, not the engulfing candle. Very, very important. This is the multiple candle break. The multiple candle break. You can see there are so many candlesticks that are required before you break this market or you break this structure into a buy. So of course here, you're picking the candlestick. Of course, there are different ways of refinement. We'll talk about that in a different video. But you're picking that candlestick. If it's on the sell, of course, this one candlestick required 3 candlestick to break it. So do that, that's a selling block. I hope now it all makes sense when you see the candlestick. They're better than my drawing. Then we have the kissing candlestick or the double mariposa. So if it's a buy, of course, you're picking the tails here, the tails only. Now for the kissing, remember you're interested on the wicks, okay? And if it's a sell, oh, let me change this color. Remember the gray are the buying blocks and the blue are the selling blocks. So for the sell, of course, you pick that. Then last and not least, we have, just changed color. We have the equal or the double tweezer or the RLT, the railroad track kind, where they are of equal size. So you basically pick both of them. So for the sell, your interest will be the last candlestick. The last candlestick is what will determine the move. Okay, so if it's a green and red, then you know that is a sell block. Then if it's a red, then a green, then you know this is a buy block. So for the RLT or for the double tweezer, the color of the second candlestick is what will determine the trend. So that is how to draw the blocks. That's how to draw the different blocks based on the colors and also how the structure is broken. Okay. So we have the double. Oh, so this is the hidden. Okay. This is also the hidden candlestick. You see it's hidden in here. Oh, no, this is not the hidden. Sorry. This is the void. Do you remember the void, the inefficiency? Okay, the void or the imbalance. Okay, so we have the buy, we have the buy imbalance, and we have, of course, the sell. So that is how to draw your blocks based on the different types of blocks that we have discussed. Now let's find them on a chart. Let's find them on a chart. Note, we already said that they can be found on any time frame. That's very, very important. They can be found on any time frame, but they are strongest if they are found on the higher time frame. So let's get to the time frame. We can start with the daily because they look awesome on the daily chart. They look awesome. Now, when you're on the daily chart, this is cable or GBP USD. When you're on the daily chart, or any chart, let's start with any chart. The first thing you want to do when you open your chart and you're done with your colors is, of course, to make sure that you can scroll back to whatever date that you want. And how do you make your chart stable so that you can scroll back to whatever time? you just go to properties, under common. So it's usually on color. So under common, make sure you uncheck these boxes. Uncheck them, then click OK. When you do that, you're able to scroll back to the farthest that your computer can handle. Now with that, you need to check where you're coming from. Always make sure that you know where the market is coming from. Is it coming from a high? So you can just identify that as your peak, or you can call it source or whatever name that you like. And are you coming from the low? You can also call it a peak or something. So the first thing you want to do when you open your chart is to identify where you're coming from, so that you can tell the structure you expect. And of course, here you can see that we are coming from this high. We're coming from this peak high, and it's evident because from that end, we've not revisited that high, or we've not gone any higher than that on the daily chart. So here is our highest point. So just to be very, very sure, you can draw a straight line on that top. Okay. Can see just a stop hand, but it wasn't actually broken. Of course, you know, a zone can only be broken by the body of a candlestick, not a tail. Now look at our start. What kind of block is this? We have a green candlestick, then a red candlestick that actually just covered the whole part here. So we can draw that block. Let's do one common color so that our chart doesn't look so messy. So you can do gray. Okay, so we have this block here, and this is a strong block. Why? Because our candlestick here, based on the body, has totally been engulfed. So we're going to pick that candlestick and draw a block on it. So this is our peak. We can just name it as peak, just so that our markup looks cute. So we have a peak there coming from a strong block. What do you expect with our peak? Of course, these, I already said that they're different strengths with different blocks. So of course, this being a strong block, it means that the market will break structure, then it has to go back to retest. A strong block is one of those blocks that you really, really need to master and identify every time you get to a chart, because it gives you a second chance to trade within it, because it has to be retested. Of course, on the lower time frame, not all strong blocks are retested, but if you get it on the higher time frame, then that is a trade that is guaranteed. So here we have a strong block. We see the market breaking structure, break of market structure, then the market trading back into that block before we actually have a real trend. With market structure, of course, you can see the market is pushing downward. So this is a definite selling cycle, but that is not the reason for this video. So I hope you've gone through the market structure video by now. If not, just pause the video, go back to the market structure so that you understand what I'm talking about. So here, now the move is done, or the move is has been created, so we expecting sell. Now we'll be looking for blocks away from this path. So we see this market breaking that, and at point of breaking, we have a block. What kind of block is this? We have that tail and that tiny tail there. Now, the kissing candle block, something I want you to note with the kissing candle block, it usually happens close or next to a break of structure. Anytime you see a break of structure, the block to look for is the kissing candle. A kissing candle block is also a very strong block. When you see it, mark it and keep checking it out, because it gives you another opportunity to trade it if you missed the first trade, or it can give you a second entry chance. So you can actually trade it 2 times. So here we have the kissing candle that got retested, and then the market broke structure. You see the break of structure giving us a lower low. Now we have a lower low and we are pushing down. So what do you expect? We expect the market to retest. What will it retest? It will retest, of course, a previous high. And where will that high be coming from? It's coming from this block here. What type of block is this? What type of block is this? Then we have, we can actually call it a strong block because you see the body of the candlestick, the second candlestick actually is lower or has engulfed the body of the first candlestick. And as usual, a strong block must be retested. We should actually be writing the names of these blocks. So this will call it the engulf. You can just write engulfed block so that it's easier when you want to do it. Let's change the size. Okay, so here we have the engulf block coming from this part. You have that is an engulf block. And this here is the kissing block, kissing candle block. Then we have break of market structure again, which is a characteristic of a good block. And then, of course, this high, remember we're pushing down, so lower, low, lower, low. We have this block here that needs retesting. This is an RLT. The second one did not actually engulf. So we have an RLT with internal structure. Do you remember I mentioned that there are blocks that will actually take out liquidity? So this here is what we call liquidity. We will do a video on liquidity. If we mention it here, it will be a bit confusing. So let's just concentrate on blocks. Then from there, we have this block here that gave us this move that broke previous structure. And what type of block is this? This is, of course, an engulf. So we have the engulf again. And what are the characteristics of an engulf? Because it's very, very strong, it breaks structure and the market has to come back to it, to trade back to it, and it has to take out liquidity, okay? Has to hit some highs, has to break those highs before the market now shifts lower, breaking structure again, giving us more lower lows, okay? So that's then we continue. Now we have another block here. Every time a block is formed, make sure that you just highlight it. We have another strong engulf block. This here from the green candlestick and the red. You can see the red has completely covered the body of the green candlestick. So we have an engulf. What will we be expecting? We expect that the market at some point must trade back. Remember, a strong block is something that actually guarantees, especially if it's on the higher time frame, it's guaranteed that the market must come back to retest that. Okay, so these are block that you're not supposed to ignore. So it trades back into the block, then the market shifts lower, breaking structure. And while doing that, creating a lot of liquidity in there, giving us a low. Now, when this structure is being broken, you can see that it created a multiple candle block. Can you see this part here? You have this green candlestick, and then we have two candlesticks before it's broken, before this lower low is created. So we have a multiple candle block, and that is what, or the position of the market as at today. This is what we are actually trading on today. And if you check multiple candle block, and if you check my post on the event, we were actually trading out of this block. And that is how to identify your blocks on a daily time frame. Remember, first you need to know the structure. You need to understand that the trend that you're on. You start with identifying if you're on the peak or not, peak at the top or peak at the bottom. If you're at the peak at the top, you expect a selling cycle. on the selling cycle, with every break of structure, you expect it to be coming from a block. So yours is to identify where did that move come from. Then you create those blocks and of course, identify the break of market structure. So as at now, we are on that multiple candle block. We expect the market to retest. If we are continuing downward, of course, we expect this low to be broken. That is, if the market decides to go lower, it has to break this lower low. If you're on the sell, you can actually have your swing take profit at this low because it's the last liquidity point, but it could actually just retest being on a Wednesday and continue up, breaking structure to the top side or with an impulsive move, giving us a reversal, an institutional reversal pattern. I hope you've also watched the video on that. Then we'll forget about all this selling, and actually go to the buy side. But as at now, this is the point where the market is at. Now, this is on the daily time frame. Can we see the same thing on the 4-hour chart? Of course we can. So you go to the 4-hour chart. Same things. What do you do on the 4-hour chart? Of course, you want to identify where you're coming from on the 4-hour chart, and our recent point is a high. Okay, so we can actually name this as our peak. Remember, on the 4-hour chart means that you have more candlesticks than what you have on the daily. And so I don't want to go back and start from all this. Okay, so we can just start from our recent high. So we have this peak that gave us break of market structure, internal structure, external structure break, and then we started off. Now with the external structure break, we have an RLT. You see this? None of them is engulfing. Okay, the candlestick, the bodies are actually equal. Can you see this? The bodies are actually equal. So we have an RLT block. So, or the double tweezer block. So you can call it RRT block. So an RLT block, the market now trades back in, since it's just a peak. You know the rules of a peak. Once a peak has been formed, it has to be tested. So that it's locked. For a peak to be locked, there has to be some attempt to actually see if it's strong enough. So the RLT block gave us the retest that locked out our peak. So here we have the RLT block. We trade, we wait for the market to break the external structure out here. Okay. And while doing that, we have blocks in here. Can you see this candlestick? That is almost invisible, the red candlestick here that is almost invisible. That gives us the hidden candle block. So yours is actually to just mark these blocks. Then here, next to this, remember we said at every structural break, there is the kissing candle block. Can you see? We have this structure here being broken, and what block is breaking them is the kissing candle block. So you have that. You also have the imbalance. Hope you can see the imbalance. So what you do on your chart is just to mark them and leave them and see which ones will be retested as the market moves on. So we're going lower. We have this range, and with this range, there is this RLT again. No, this is no, these are two candlesticks. So this is an M, a multiple. This is a multiple candle block. And with it comes the imbalance that we are actually trading on now. Okay, we're actually trading from this imbalance block. So here we have the imbalance block, or the void, let's call it the void block. And that is what the market reacted from. It reacted the void or the imbalance block, and the economic event pushed the market away. What are we expecting? Again, the same thing. It either is going to retest the price 3,200, then push higher for a buying market, actually violates everything and breaks this law. The only way to tell is to actually just watch. So this is the 4-hour breakdown of the same currency. So you can just decide if you want to do it on the daily. If you're very patient, if you're a swing trader, the daily would give you beautiful market to trade on. But if you're a session trader or day trader, the 4-hour chart is actually the best. Note you can also get the same on the hourly chart, on the 1-hour chart. You can still have the same markup on the 1-hour chart. It's only that the 1-hour chart is a bit noisy. Okay, so many candlesticks, so many range in between, okay, that are not really necessary. But if 1 hour is your thing, of course, again, you identify where you're coming from. So identify your peak, identify the trend, and do your blocks. But the blocks are available, or they are present even on the, they are available on the 1-hour chart. So you can see them. Like this is a very strong block. You see that 10 graph? What did the market do? We gave an event to trade back into that 10 graph, and the market has been pushing up. Then we have the invisible candle there. The market retested, pushed up. Then we have the RLT there. The market actually was trading out of this on the 1-hour chart, and we've been pushing up. Hopefully we have this invisible candle. Can you see this invisible candle here? Hopefully the market comes back to the 1-hour chart on the invisible block. We can either get the 50% entry or the optimal entry. Alternatively, we have the kissing candle just next to this zone. We are actually inside a block, but this doesn't look valid. Looks like it will be broken at some point. With that, we also have this imbalance. Okay, so we can either be trading from the imbalance or the hidden candle. For me, the hidden candle is always stronger than the imbalance, and of course, than the kissing. So we'll wait and see. And you can also actually use a line chart to know the strongest point that will hold. Of course, with the line candle, the sharper the edges are, the more strong the reaction will be. But the ones that are not so sharp, the reaction is shallow. So that's the difference between using a line chart and a candlestick chart. And you can see now with the line chart is telling us that the market may react on the imbalance, and also maybe on the hidden candle block. So for me, that will be my point of interest. So now that's how you do it on the daily, the 4-hour, and of course you can do it on the 1-hour. So guys, if you have any question or challenges, remember you can always find me on any of the social media platforms. So on Facebook, you find me on Forex Exploits Online Academy page. You can inbox your questions and your challenges. If you're not on social media, you're not on Facebook, you can find me on LinkedIn using the same name, the Forex Exploits Online Academy. And of course on YouTube, same name, Forex Exploits Online Academy. Be kind to watch the previous videos, subscribe, share with your trading community, and let me know how are you faring on your trading. Until the next time, guys, I'm humbled to be part of your trading journey. Thank you so much, and I wish you the very best. Indeed, Forex is doable. Remember, Forex trading is a business like any other. Therefore, always approach it professionally. Until the next video, thank you so much, and do have a great day.